This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. From Trump's assurances on Fed Chair Jerome Powell to hints at de-escalation in the China trade war, there's no shortage of market-moving news. David unpacks what these developments could mean for investors, why recent market volatility isn't signaling an all clear just yet, and how strategic manufacturing and global trade negotiations might shape the future of the U.S. economy. Into the news we go, David, and we're going to do a little hot off the presses theater here because as we sit down to record this, Treasury Secretary Scott Bessent is holding a press conference, and here's a CNBC headline: Trump, Bessent, and Musk give markets the reassurance they need. And there are a couple of bullet points here. U.S. President Donald Trump said he has no intention of firing Federal Reserve Chair Jerome Powell. We'll have more on that in a moment. Treasury Secretary Scott Bessent said he expects there will be a de-escalation in Trump's trade war with China. Perhaps he's elaborating on that even as we speak here. And then markets rally on promising comments made by Trump and Bessent. This is like a soap opera, David. Up and down. Where are we? And what do you see in the near future for the markets?
Well, I would tell you, it's not an all clear. Okay. And this kind of volatility doesn't usually mean we're at the end of whatever this correction period we're going through with the markets is. We've gone 2% 3 days in a row as of this recording now. The major indices have all moved more than 2% every day, 3 days in a row. That is not normal market action, right? That's pretty big moves. We were up, then we were down, and then up again, and really you end up almost in the same place you were, right? So from a week ago, from 2 weeks ago, et cetera. So I would not think that this would signal the all clear. However, it is optimistic that we are making what we call higher lows in the market, right? So we have not retested the low that was set just a few weeks ago in the below 5,000 on the S&P. So we're going to watch these levels carefully to see if we are in the all clear. But the economic data, and we'll talk about the rest of the show, is not actually rosy that is coming out. In fact, job cuts are increasing, et cetera. We'll talk about that. But the gist of this is this administration has, Trump, the one good thing about Trump is he listens to everybody in the room, right? He will go to 15 or 20 sources when he's looking to make a decision, and he'll let everybody give him his input. And then some people have a little more weight in his mind, and then he makes a decision. And he does adjust when he thinks he's wrong. And I think that's what you're seeing here is the way they rolled out tariffs was I would just say, not a success, right, to put it bluntly. They didn't sell it with tax cuts, which I think you're going to hear about here very soon. They didn't position it what their tariffs are. I've said to clients all along, we've had tariffs averaging about 3.4% for the last 20 years. I think they're going to roughly double, and I think that's going to stay. So, but these 145% tariffs on China, 10% on everybody, 25% for our, that stuff is negotiating tools, right? So what Bessent, who's the smartest guy in the room, in my humble opinion, is now getting to the front and getting more of Trump's ear. Peter Navarro, who's a little bit of a wild card, was the one pushing the rhetoric on tariffs, but without realizing, if you're not going to show us the targeted tariffs, in other words, you're crushing right here in the Midwest farmers, right? Because we export a ton of our soybeans, corn, et cetera, and it's going to be unfair trade, and it's going to crush some industries. So it makes sense in the auto industry to protect the auto industry. It makes sense in the steel industry, right? We have to be strategic, but we don't make a lot of textiles anymore, nor do I think that our kids want to go start sewing together garments, et cetera. Now, higher-end clothing can be custom-made, but mass-produced things are unlikely to have those factories come here. So I think what you're going to see is Bessent now talk about specific. China is to the point they need to become a consumption-based economy. They've been a manufacturing-based economy. We have been a consumption-based economy for the last 50 years, right? Once Nixon took us off the gold standard, the only way for us to keep going with fiat currency is for the American consumer to consume. And that's why these trade imbalances were set in to begin with. And so you're not going to get us to an even trade balance, but you could get it to a fairer trade balance, and I have no problem with that. You and I first met, we started talking about tariffs way back 8 years ago.
I remember that.
Trump's first go around, and Ian Swanson, son of our advisor Sean Swanson, free markets. I was like, well, yes, if rules are fair, that is fair. But when you have a communist country versus a capitalist or democracy, that's not going to be fair trade. So you're going to have to negotiate some of these levels. But anyway, I think Bessert has successfully already negotiated with Japan. They just haven't announced it yet. You've seen him negotiate with some other countries, and they're going to get China to come to the table. And because China's economy is much worse off than ours. They need us way more than we need them. So we do have leverage. However, if you don't play it correctly, play your hand correctly, and you give away your leverage without getting something for it, you can lose in the argument. I think that's where the misstep was with how they rolled out the tariffs.
Well, since you mentioned that, you sent this around to the team, David. We expect China in the second quarter real GDP growth to slow sharply to 0.8%. Is that quarter over quarter from the previous year annual? Go ahead and decipher what's on the slide and tell us what kind of shape China's in right now.
So basically you measure annualized, but it's reported quarterly. And just so you understand, China under 5% GDP is almost like being in a recession. And their current is at 4.9. That's recessionary based on their population and the growth they've experienced for the last 30 years.
We would love 4.9% GDP.
Oh, absolutely we would. But
tell me again, why is it bad news for China?
Because China's government owns every one of these companies, either a majority or a minority. They have an ownership. There's no free companies over there. China gets an ownership of any one of their companies, right? So these numbers are padded. So the way I was taught when I took economics is you take China's GDP and you divide by 0.5 or 0.67. So either count it as half of what it is or knock off 2/3 to get a real number.
I see. Okay.
So if you took that off, then their GDP would be around 2.7% or something, right? 2.4, 2.7, something more reasonable. But now we're seeing their reported number potentially being under 1%. That's dismal. We haven't seen that in a long time since the Great Recession. And China is leveraged to the hilt in real estate, we've talked about for the last couple of years. And so now they need to shift. And the only way, and this is where Scott Bessent, has the upper hand, is that the way they can drive their economic growth is through consumption. I mean, they have 1 billion people that can consume products, so it behooves them to want to import products they do not currently make, which is not many, but they still can, and allow products to be sold. And then, of course, they can, get revenue off of that, taxation, et cetera. So they are going to try to become a consumption-based economy while the U.S. starts to become somewhat more of a manufacturing economy, but it's going to be a strategic manufacturing economy, right? What goods and services make sense for us to produce here? And again, you get into more of a national security debate. Do we want to produce chips here? That would make sense. Do we want to produce things that have to do with AI, quantum computing, cybersecurity? Those things make sense. So you want to make us still the tech powerhouse of the globe. And so that's where I think you're going to see some de-escalation is the word that Bessent used, private behind the doors. And there's some people tweeting out. And one of my friends who is kind of in the know sent me some information last night. And again, we're not saying we know anything, but I do believe you're going to see an acceleration to getting deals done here in the next 10 days, 3 weeks, something like that. And we'll see some probably lofty announcements. I think that's going to be paired with suggested tax cuts that they're going to then pivot over to Congress and say, hey, put this in place. So if we could increase revenue, and I'm not giving an exact number, but Chip, imagine if we could increase revenue, call it $250 billion a year in governmental revenue via the tariff increase, right? And we end up in that 6 to 8% where I think we end up. And then we take that $250 billion and then give it to the bottom 50% of workers. In other words, those that are still paying taxes, right now about 49% of Americans don't pay a dime in income tax. What if we push that up to 60%? Again, I'm a free market guy, not necessarily liking that, but that's what they're going to do. That's going to appease the working class who put Trump in office. That's what they're going to try to do. And I believe that basically individuals making $75,000 to $80,000 will have a very, very low tax bill if they get this done. And I believe on top of that, to placate some people that are moderate left, they're going to tax the rich. They are going to increase taxes they're going to create a new tax bracket, probably around $1 million, because that's a nice round number. And that will probably be in the neighborhood of 42% tax margin break. So that hurts someone like me financially, but it does help a lot of people. And so there's going to be a little bit of a trade-off here. But again, we'll wait and see what these announcements come out. But I think the markets are at least realizing, okay, not the end of the world, right? But it doesn't mean that the economy is great. We still, and we'll talk to that the rest of the show, there are still dangers. There are still things to be careful of. This is not hey, go start buying leveraged ETFs left and right, which we're seeing an exorbitant amount of people doing and getting harmed in a very serious way.
I'm only going to give you about 30 seconds on this, David, but the CNBC story did mention one of the things that reassured the markets was Trump saying, I'm not getting rid of Jerome Powell, because just a few days ago, the drums were beating. Well, here's a CNBC headline. If Trump wants rate cuts, he would likely need to replace the Fed's full board along with Powell. It's not clear that there's constitutional authority to do all that, but apparently that storm has passed.
Yeah, I believe, listen, Trump likes to wield a big stick, and he likes, that's his personality. Again, and I know a lot of people can't stand him. Yeah. I don't necessarily like the rhetoric, but the policies behind him are actually rather sound when you really dig into the data. But here's the thing is, the smarter people are starting to prevail in the room. Like I said, I think Bessent and Commerce Secretary Ludnick are actually starting to move to the front of who he's listening to, and they're the one, hey, you can't do this. And so they've had to go out and do talking points. And listen, Powell's term is up in less than 12 months. He can replace him if he wants, but Powell is, I think he's behind the curve because, to be fair to Trump, Powell said, hey, it's time to start cutting rates. We've gotten ahead of inflation. Well, inflation is down lower now than it was then. They did a 50 basis point cut in September. We had GDP growth at 3.5%, and everything was fine. GDP growth is now projected to actually be only 1.2%. So why wouldn't you cut unless it, again, is political? And again, these guys do have spite for each other. They don't like each other. And so, but I think Powell has no choice but to cut coming here in May. And again, that's the big move I saw as of this morning. We're recording this on Wednesday morning. As Bessett's news came out last night, we saw the trend. I know the stock market's up and everybody's like, wow, 2-3% move. Pay attention to the treasury market. I always tell you, the smart money, the bond market is the smart money. And we saw the 10-year treasury drop about 2.5% in yield. That is a monster move in a couple of hours. And so if those rates do come down, that's ultimately what Trump is trying to get done anyway.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week.